Good day, everyone, and you're welcome to the channel. So today we want to discuss ETF trading. Now, this particular lesson was first explained. There was a first live class on it in our WhatsApp group. People in the WhatsApp group had access to it, and we did a theory version. So this video is going to recap that theory version in addition to the practical aspect of it. So if you're not in our WhatsApp group, I would encourage you to join it. But let's just get started. Once again, this presentation is brought to you by DASTCI, which is a training and earning cryptocurrency platform. Now, we decided to discuss ETF trading because ETF trading is a less risky version of futures. That means you have room for higher profits with lesser probabilities for you to liquidate or burn out your account. So without further ado, let's get started. Now, I want to go into some of the things we'll be discussing today. We're going to introduce trading as a whole. We'll also introduce ETF trading. We're going to talk about some checks and strategies for you to employ before you go into ETF trading. We're also going to relate ETF trading to professional portfolio creation and balancing, which is an abbreviation PBCB here. Now, before we go into this, I want to just explain that ETF is a form of trading, and you need to understand that risk management is very important, and you have to set up a professional portfolio, ensure that it is properly balanced. Now, we do recommend you have the basics of how to set up a professional portfolio before you go into ETF trading. We have a free video on the basics, the overall basics on how to set it. Once you watch that video, you will understand this last sentence here, where we say ETFs should be traded with QTFs. Now, this free video that explains how to set up this will be in the description box. You can check it out after this video or quickly watch it, then come back to watch this video. Now, this QTF here refers to quick trade funds. Okay, when you set up a portfolio, you are not expected to put all your budget in the trade. You're expected to partition them in a strategic way, of which QTF is going to be part of those sections. Now, this ETF trading should be used with a part of your QTF. QTF simply refers to quick trade funds. That means funds you've allocated for quick trades. And it is in this section that ETF trading belongs. Now, this particular strategy is brought to you by DASTCI. So you might not find that particular strategy or what we're saying here anywhere else, but just follow through. You would understand it better as we move on. Now, I want to also introduce myself. My name is Diana, and I'm your facilitator for today. This session, like I said already, is an extension of DASTCI tutorials for all types of crypto traders, whether you are a beginner, intermediate, or professional crypto trader who want to consistently stay in profit in the digital asset sector. Now, what is trading as a whole? I want to discuss what trading is before I go into ETF. All right. So trading as a whole simply refers to you buying and selling. It's as simple as that. Now, crypto trading refers to you buying and selling cryptocurrency or a crypto asset. And we have different types of trading. We have spot trading, futures trading, marginal trading, and ETF trading as well. Now, also, trading is also categorized to the behavioral types of trading. For example, we have swing trading, trend trading, seasonal trading. We have people that just want to trade as hodlers, people that hold. So those are also different types of trading as well. And ETF trading simply refers to you trading ETF. Now, what are ETFs? ETF is simply an abbreviation for exchange traded funds. So ETFs are leverage tokens specially created by the exchange on which they are hosted, especially designed to take advantage of trade market situations. Now, the normal regular buy and sell trade that is used to us is what is referred to in the crypto space as spot trade, where you just buy and you sell. Spot trade has the less riskier the less risky form. I mean, is the one with the least risk in all forms of trading as regards the types of trading, you understand. um that is for day traders and all, but for overall type of trading, I do recommend hodling, because in hodling, if you know what you're doing, you can actually make so much profit without losing a dime in hodling. So to me, hodling is still the safest. But when it comes to quick trades, spot trading is still the safest. Now, if spot trading is the safest, that means if you know what you're doing, spot trading should be the safest. So if spot trading is the safest, I would want to categorize ETF trading as next to it before we then talk about futures trading. Now, futures trading usually carries a lot of risk, and normally in the crypto space, higher risk usually warrants higher profits as well. So that might be something you might want to consider or look into in detail later on. But ETF trading is a sweet spot for those who want to make higher profits without the unnecessarily high risk. Although, depending on what exchange you place these trades on, it will also determine the level of risk you're carrying, because some exchanges go as far as increasing the the percentage on each of these tokens. Now, let me just break this down again. Now, we have exchange traded funds. This means that it is an exchange. An exchange is a marketplace where you buy and sell. So a crypto exchange is a marketplace where you buy and sell crypto. So these exchange tokens are peculiar to the particular exchange that creates them. So they are not general cryptos like you would have in the case of Bitcoin or Ethereum or TRX or anything like that. They are just created by that exchange. So it's very important for you to note that. Now let's move on to the next slide here. I want to talk about the things for you to note about ETF trading. Now, ETFs have specific algorithms that differentiate them from other coins or tokens. So the trade approach you should imbibe here has to be different, even if the same technical analysis is being used. Now, let me simply explain what this means. Normally, when you want to trade crypto, you're supposed to have a basis for entering your markets. Maybe you are trading based on a signal, or maybe you are trading based on your fundamental analysis or technical analysis. We do train people on this. You would find details on that in our WhatsApp group, on our website. We train people on that also, and the courses that we as well offer how to do proper technical fundamental analysis. But whatever form you're using to enter the crypto space, you need to understand that your trade approach towards ETF has to be different, because ETF is characteristic in certain ways. They have certain characteristics, and you need to put that in mind before trading an ETF. Okay, it's different from trading spots, all right? And some of these features is what we want to explain here. Now, some of the things you need to consider when you want to trade an ETF is that this is supposed to be a set under your quick trade funds when you set up your professional portfolio. So if you set up a professional portfolio, you can remove out of your QTF to trade an exchange traded fund. And you have to also bear in mind, obviously, if it's a set under your QTF, you should not include it in your SSS, in the SSS part of your portfolio. That is your spinal structure system part of your portfolio. You shouldn't put ETFs there, definitely, because they do not belong there. Now, another thing you need to understand before trading crypto ETFs generally is that ETFs are reset. All right, they are created on basic algorithms. So after a while, they are actually reset. We do not recommend that you hold an ETF past a week, because sometimes, depending on the exchange in which you're trading the ETF, some exchanges may reset their prices or even edit the algorithms within 24, 48 hours, some within 1 week. If you're lucky, maybe in a month. But we do recommend that you do not hold an ETF past a week. It will be very wrong for you to say you want to hold an ETF for like a whole year, you know. to make profits from it, even though an hodler would hold a cryptocurrency for some even hold it as far as 6 years. But you would be very wrong to do that with an ETF. Now we also want to talk about the liquidity aspect of the ETF, the liquidity limits, so that you understand how to trade these assets as well. It's important for you to note that ETFs are exchange tokens. I keep emphasizing that. So they are not coins. Liquidity here simply refers to how an exchange can be traded for another. So how quickly you can get your money back in whatsoever currency you initially used to purchase it. So let's say, for example, you use dollars to buy gold. That means that there's enough liquidity for gold for you to be able to sell back that gold to the dollars in which you used to purchase it, or exchange that gold to any other assets, like maybe silver or diamond or whatsoever. That basically is what liquidity is. Now, if you want to talk about ETF's liquidity, they are not very liquid because they are peculiar to the exchange in which they are created. So let's say, for example, you are trading an ETF on Binance. It's impossible for you to go and sell Binance ETF in maybe Mexc, which is another exchange, or maybe Hotbit, or maybe KuCoin or OKEx. They all have their own different exchange traded funds. So the liquidity on ETFs is very limited in the sense that you cannot exchange it round or send it to other exchanges for value. And most people as well, I mean, you can still even sell Bitcoin to another person, but you won't find anybody willing to buy an ETF from you. Okay, you can only trade an ETF. It's best to only trade an ETF on an exchange. That means your buy order and your sell orders needs to be executed on the exchange itself. So I hope that is clear. And that is why it is listed here that there is no inter-exchange liquidity for ETFs. So an ETF as well mostly requires just technical analysis. TAA stands for technical analysis, while FA stands for fundamental analysis. Now, ETFs usually require just technical analysis because if you're looking at fundamental analysis aspects of it, you might just say, okay, you want to go more in depth into understanding the exchange itself, the team behind the exchange itself, but you can't really do fundamental analysis on the ETF token itself now because they don't come with white papers or or things like that. So they don't come with airdrops or something. They are totally different. They are leverage tokens. So what it does is, let's say, for example, Bitcoin is going to rise in price. If you're very sure of your technical analysis, it's like you then now buying an ETF and then saying, okay, the exchange is going to reward you for getting that correct price prediction. And so if you were supposed to make just 2% profit, if you are traded it on an ETF, you might be making 5% profit because the exchange has added a percentage on that price prediction. So it is encapsulated in that ETF token. All right. So they do come with percentages like Binance. I think for Binance it's like 1.5%. On other exchanges, you find more crazy activities. You would see that some are giving you up to 3 times of your capital or your entry position based on how you choose to trade it. So it's very important you keep that in mind. So that is the theoretical aspect of trading ETFs. Now let us look into the practical aspect of it. Okay, so now we are on Binance. We're on the web version of Binance. I want to teach you how to locate the ETF aspect on Binance. When you log into your Binance, this is mostly the first page you see. And to locate the ETF aspect here, what you can do is to then click on markets, and then you click on zones. That is for people using the mobile app. Okay, that's for people using the mobile apps. You have to click on markets, then you click on zones. I'm not saying zones yet because this is the web version. So for those using the web version, what you are going to do is simply click on this arrow here and continue clicking it till you see ETF right here. So what you want to do is click on that. Now you're seeing a list of ETF tokens, and I want to explain what this is all about. Now we're seeing link up, XRP down, ADA up, and BNB down. So I kind of made a similarity with ETF trading as like you getting a reward for a proper price prediction. So you would find out that most people trade ETFs both ways. If you have a price prediction that this price is going to hit this and you place a trade based on that, then you discover that, okay, after a while, the price hits that and then you've made a higher percentage. So to make a higher percentage on those your price predictions, is when you need to trade an ETF. However, people also use ETFs to make money in bearish situations. That means that, let's say, for example, when Bitcoin dipped from $60,000 gradually all the way down to $20,000, during that period, professional traders were making profits from the ETF section because you can trade. ETFs give you the room to trade a coin in the upward direction or in the downward direction. So let's say, for example, Bitcoin is going down in price. That means that BTC down will be going up in price because you're predicting that BTC will continue to go down. So if you go buy BTC down and the BTC itself actually goes down, then you would actually make profits. All right. So here we are on XRP down, meaning you are saying XRP is going to go down in price. So if XRP goes down in price, then this will actually go up and we are going to actually make profits. I hope that is clear. And this is why I'm doing a video so that you can rewind and listen again if that aspect is not clear. So, but I think it should be anyways. Now, when you are on the screen, you would find out that this gives you the prices of how people are buying and how people are selling, because red usually denotes sell. If you scroll down, you would see the buy orders as well, which are the green orders. I did a previous video on how to buy and sell tokens or crypto coins on Binance. Endeavor to watch it as well. And this is Binance. So here you can just click to, study your markets and, understand how well to enter the trade. To trade ETFs, I always recommend that you also use technical analysis, use market indicators, and all. Here you find out that the Bollinger Bands is up and working. We have the moving average too as well. The moving average, I prefer setting it to 20. I use three different moving averages. I have MA20, MA50, MA200, but I've not set them on this particular exchange because I seldom use the web version to trade. Sometimes it's just my phone I prefer to use to trade because it's easier for me. But when I really do want to trade, sometimes I then open the web version and edit all these things, then go back to edit it again. I edit it based on what I need to do. So don't mind what you're seeing here on the screen. Just know that you need to use market indicators for understanding how to enter trades because you're trading. So it's very important that you put that in consideration. Now I want to talk about some market indicators here. The Bollinger Bands usually come with three bands, of which the middle one is the average. All right, now this is the ETF interface on Binance. The ETF interface on Hotbit is where we're going to go right now. So I'm just going to click on hotbit.io. And once you go to the website, you would already see ETF here. So you can just click on it and you're seeing here, we have BTC ETF, the derivative of BTC actually. So you can always search. These are other ETF tokens. You can always search to trade any of this as well, based on whatsoever analysis you're using and whatsoever coin you wish to trade. Now, you would see that we also have ETF offers on Mexc as well. I'm just waiting for this to load. All right, and it's also very easy for you to access because here you have it over here. So here you have your interface in Mexc, and it is educating you on the price actions of the ETF token as well. So I do recommend people to use ETF trading when there is a bearish trend so that they can quickly use it to make profits during that period. However, it is very important for you to understand that ETF trading carries higher risk than spot trades because of the increase in the percentage. So if you were to lose, for example, just 2% in a spot trade, depending on the ETF you're trading, you might be losing as high as 20% or as high as 100% or as high as maybe just 5%, depending on which exchange you're trading. But it's easier for you to quickly control your losses here and prevent liquidation, unlike when you're trading futures. Although futures gives room for higher profits as well. So you have to be very careful in selecting which one works for you and which one you know you're going to be very good at. So I want to encourage you to join our WhatsApp group, our Telegram group, for you to have full access to some of these live classes. We'll also be dropping some of these more detailed versions on our website. So be sure to check our website frequently, especially the blog aspect. The link to that is in the description box as well. And I also want to encourage you to subscribe if you've liked this content so far. Subscribe to our YouTube channel and hit the notification button.